Perhaps you've already come across the concept of fundamental news or trading the news in your education. One of the main factors which can influence the price of an asset is the release of news which will have a bearing on the supply and demand of an asset. Today we'll be exploring a three-step trading strategy which involves trading the news. But first, let's understand why and how the news affects the markets. World news like outbreak of war in the Middle East or the Bank of England announcing a planned interest rate hike can have a big impact on market prices. The mere expectation that the interest rate is going to rise is enough to affect the exchange rate of the British pound. This is the power of news releases in the financial world. So how do we go about trading the markets based on news? While we don't know what tomorrow's news is going to be, we can still plan our trades around the various economic announcements that are scheduled to be made by the central banks, major corporations, and leading industry experts. Most of the information concerning these scheduled news announcements can be found on most economic calendars like the anyoption calendar, which you can find at anyoption.com, or financial news sites like aomarkets.com. Now, with binary options, you only have to be concerned with the direction of the market movement and not by how much the market will move. The trick here is to get into the market when the price movement is already underway. Here's how you can use this strategy in 3 steps. Step 1. Identifying the trade opportunity. Let's assume you're interested in trading the Euro-US dollar forex pair. Since the interest rate is the primary factor that affects the exchange rate, you need to check the economic calendar and see when the European Central Bank or US Federal Reserve is going to make an announcement about anything that might affect the interest rate. Then wait for the announcement to be made and see if there is a significant difference between the expected rate and the actual rate. Step 2. If there is a significant difference, the next step is to check and see from your price chart the direction of the movement. Purchase a call option if the market is on the uptrend and a put option if the market is on a downtrend. Step 3. Exiting your trade. Knowing when to exit the market is as important as the timing for your market entry. Since binary options trade expiries are predetermined, you need to ensure that the expiry time of your option is relevant to the context of your trade. In our example above, this means choosing an expiry time that is no more than 15 or 30 minutes longer after the news has been released. While this is a great trick to know, you should be well prepared as everything will happen within just minutes of the news being announced. In other words, stay on top of it by having your economic calendar and platform open before the event is due to take place. Good luck!